Hey, look what we got here. We got some freshly mined commodities. Got some gold, some silver. Got jewel pods or Glock. It's Austrian, not Australian. Our water bottles here. Got to stay hydrated, but beyond that, water is very important. Invest in water. Michael Berry, big shot. If you're new here, we're going to talk about gold and silver in the ETFs. Here's Rand Gold. There's my Husky. He's Russian. He's not Australian, but he's a Russian. He's excited for this. He thinks gold. Oh, he's ready to invest there. Look at him. He's excited. Oh, he's ready. He's fucking ready. So if you're new, subscribe to the channel. You might be in for a big shock to realize that I do not speak like this at all. So, welcome. Hope you're having a wonderful day. Jax is really excited about this gold and silver video. I am too, because hopefully I can make this video, never talk about it again. I could post this video, I could change my shirt, I could shower, and stop bumming it out here. But, well, I'm gonna enter my password so you guys don't see it. But we're gonna talk about gold and silver ETFs, and as you guys see, I have gold. That's just some, I don't want to tell you my secret so I get robbed, but... Well, I have gold hidden all around the United States of America. That's the best way. I have gold and silver everywhere. I love it. I'm a fan of it. I love physical gold. I love physical silver. Right now, silver is outpacing gold. It's great, you guys. You know, and it's great. I like it in the 100 ounces like this. I'm able to work out. You know, why do you think I am so ripped lately? But no, you know, some people call it a paperweight. That's why it's funny to talk about because they think it is a paperweight, and here's the issue. I'm going to give you guys a lesson on gold and silver in the investment for some of you who are new, but I am giving you my thoughts on it, and I'll get to those points, and we're going to go through an option chain as it's relative to playing it, because I love gold and silver physically. I hate it paper. And what I mean by that is trading any of these companies, trading these gold ETFs, trading Rand Gold, that's one I have. And I looked at it and I did find a play I like, so I'm going to be able to shit on it, as well as at the same time finding a good alternative to playing gold through it. I did find some that I like, but all in all, I'm not too big of a fan of it on paper. So let's talk gold and silver, the basics. Why do people buy it? And looking at it as an investment. Jax, what's up, baby? The door's open. I'll get you in a little bit. I got you. We'll go to Cheesecake Factory and everything. Don't worry. Yeah, he liked Cheesecake Factory. But yeah, why people like it as an investment? It's safe. Gold is safe. You buy gold for the specific purpose that it's not going to fluctuate a lot in value. It is preservation of value more so than growth. You could equate these gold eagles, one gold eagle, to a share of Amazon. You know, I think they're roughly the same price, you know, about to be, give or take a few months. But the difference is gold has held that price, and it's only moved like 100, you know, give or take, what, $300 in 10 years maybe, or 5 years. I got to go look. Don't flame me for not knowing, but it doesn't move a lot. And that's why I don't even give a shit. I don't even look at the price of gold. Even now, gold is brewing and there is stuff in the market that's important, but for the most part, it's not going to move. Same thing, silver is a different scale, and silver is used in industry. So silver is like, again, you're investing in a commodity. It is a store value. I have it for my conspiracy theories, and you know, if there was a global hack end of the world, who knows, martial law, crazy stuff that, you know, we like to make fun of, but no, I'm kidding. But even, you know, applicable use, and, you know, one crazy conspiracy route, is it good to have silver? Yes, you know, it's probably going to be easier to divide and split up silver as a store of value in the event you don't have your money and your cryptocurrency is not working. But also, the real main point, higher growth. If you want to invest in the commodities, you could diversify between gold and silver simply by having silver with your gold, just because it could go higher. However, some people would quickly debate in industry use with a lot of other reasons of how it, you know, in commodities markets are very manipulated, inflated. They say the chances of silver going up is very low as well too. So, there's a lot of bears on these commodities. That's the thing. So, Again, why you buy these essentially for safety. You're buying them for appreciation. They're gonna go, it'll appreciate a couple percent. Don't expect anything higher than 3 to 5%, and if it is, that means something's up. I think overall return on gold and silver in a overall year to date, it's safe. That's why people do it. But stocks, other assets, they're going to offer you more of a return. People want more of a risk. So that's that. Now let's talk about why I don't like the options. Because they're not going to give you value. A lot of you guys think it's this easy route. They're like, okay, market's going to go down, gold is going to go up. One, that's not the case. Like I said, gold is manipulated. You don't always see it. And now there's a big distinction that needs to be made. This is Rand Gold. That's one of the companies. My Glock is on my keyboard. But that's Rand Gold. That's one. That's a company. Then like GLD. There's the ETFs. And then there is these, like the Spider Gold shares linked to gold. This is the most closest link to gold, I think, correlation-wise. But then there's like, the one I had was Rand Gold. That's a company. There's a bunch of other, there's a Canadian Barracks or something, There's a ton of gold companies, and those are companies. Now, do they move up? It's like Bitcoin. It's just like I made that video a few months ago with Bitcoin and like Riot Technologies, or that other one that came out, people buy it simply because it's linked. But again, these companies, from a fundamental perspective, they are mining gold. That's where they do make their money. The value's going up. They have inventories. It makes sense to a degree. So, but at the same time, the issue is these are companies. That's why I let you guys know. At the same time, gold, the physical price, the spot price of gold can rise. However, the company itself does not mean that investors will hold paper company. The people have liquidity needs, and again, the market, people might sell off. The other level that a lot of people miss on is that it's not only just liquidity needs, but investors are going to sell off if it's going to be, what was I going to say? Sorry, I was blanking on what I was saying, but I wasn't saying investors. What I was saying is that you're also going to have now the next link related to the ETFs. Those ETFs like DUST, GLD, or like DUST, UGLD, or any of the inverses, stuff like that, they own these companies. So they're buying paper companies that own gold, that engage in gold mining or the gold business, gold trade, however it may be, but they are buying those ETFs. So it's kind of the link where essentially gold could go up, the companies might not go up, therefore the ETFs might not move and gold might not move. Now the next level, most of the ETFs that have options are shitty to play. The option chains aren't favorable. Like here's GLD. Let's say you went out to like January 18. We'll go through the option chains here, but if you went outside the money, these are at like 50 cents if you were on a small account. Even if you went for the ones going for like, let's say 99 cents now, you would have bought these if you bottom ticked, if you pretty much bottom ticked the stock and it's zoomed in. My cameraman's not bad. It's me, I'm the cameraman, but yeah. You bottom ticked it, you could have got it at like 30 cents to 39 cents, and now it's at 70 cents. It hit maybe $1.35, $1.20 yesterday, now it's at $1. So you would have went 30 cents to $1. And I think on some of the more further out the monies, you would have went 30 cents or 16 cents to 50 cents, or 25 cents to 50 cents. Really, damn, my camera, that was awful. I'm sorry. I should have just went up here. I'm trying to go through the camera at the same time, but you guys get the idea. It's like a 200-300% risk reward. And if you look at when gold really dropped and the market really dropped, this was in October, the market really dropped and we're lower, but now the options on the January are the same price. If you do go out to February, it gets a little better if you still kept some time on your options, because you could have got these for 20 cents to 30 cents. But again, they'd be at 82 cents. That 400% is a little better if you could have got them. But comparing it to October, if you bought them if you bought it at the wrong time, you're only up 100% because they were at 30 cents. So I like Rand Gold. This is GLD, but pretty much I was looking through them, like Rand Gold as a company. And what I'm saying is GLD is going to be a slow mover. The options look cheap. They usually don't go up. And what I'm saying is you have to really get them. The chances of you're most likely going to be that guy who got them at 30 cents because of the spreads. You could see them, watch them tomorrow. You could even see them looking here now at the puts. That's 60-cent spreads on a pretty cheap stock. Overall. 40 cents, 60 cent spread, and it's cheap. That's Rand Gold, but I think this, you know, same thing even applies with GLD. That's with a lot of these gold stocks in general, because there's a lot of implied volatility. People are expecting gold to move. People are just like you guys are all thinking, okay, it's going to go up. It's kind of even priced in with the market makers, but most often than not, they don't really hit break even. That's why I really do not like them. But I was looking at Rand Gold as a company. I think you would be better off. The options are a lot more illiquid itself, but if you got like even the January 18th, if you were able, I've noticed that if you went more closer to the money, they're higher than they were in October, and you would have had more opportunities to get them when they were lower. And you could have got them for like 50 to 60 cents, and they're at $4. And I think the same thing applies for the February's nearer at the money. There's a lot of illiquid. It's a liquid, but the same thing applies. Gold, the thing you have to do is get in the money on it or near the money. That's what I've gone. I tried to play the companies. That's what I'm saying, Rand Gold. But the key tip, play the company and wait. You don't want to be the guy getting in gold. If you buy in when it's during these markets, it's going to be bad. Wait till we get this bounce. If you think the markets are bearish, you've been watching my videos, wait till we see the bounce. Wait till it kind of flushes out gold and silver, and then you buy back in and, you know, get ready to move. But there's a lot of stuff you could watch internationally and globally. But at the end of the day, I'm not a fan of it paper. You guys could watch these options. We'll talk about them on stream, but I'm not a fan. I love my physical gold. I love my physical silver. I love you guys. So I'm going to leave it there. Let me know if you guys have any questions. If you are new to the channel and you like this video, subscribe, turn on the notifications. We stream at 6 in the morning. Like this video. Show me some love. Give me some comments. I like those. Be on the stream tomorrow. Let's get active. It's going to be Friday. Oh, man. We're going to have the weeklies. I delayed my Vegas trip till tomorrow, so we're going to get it, baby. Let's gamble. Let's have, invest, and let's have some fun. I love you all. Goodbye.